Dollar CAD daily forecast January 2nd, FXEmpire.com. The dollar Canadian dollar fell on Friday but did manage a little bit of a bounce as the dollar got a bid in the US session. The oil markets fell, and this always gives the Canadian dollar a bit of a sell off, which of course is inverse on this chart as it is dollar Canada. And the hammer looks that we formed at the end of the day looks like it's based pretty much off the 102 level, and this makes sense as it has been supportive in the past. It's a minor level, but it is one nonetheless. We see massive support in this pair all the way down to the 99 level, so selling isn't really going to be an option anyways. Going forward, we will be watching the 103 level in the light sweet crude or CL contract in the oil pits, as if this level gives way to the bulls in oil, there's a real chance this pair could end up falling rapidly. However, there is, as I said, a ton of support below here, so the move down is more than likely going to be met with a lot of choppiness at first. Of course, if oil takes off, that could change. A break to the upside makes more sense as the dollar should continue to get a safety bid going forward. The 103 level should prove a little bit resistive, but it's only a minor area. As you can see, we've busted through it a couple different times, although it does produce a reaction every time we see it, at least on the short term. The real volume will be coming back in January into the markets, and that will be vital to the future direction of not only this pair but the oil markets in general, both of which are so heavily interconnected. The Canadian economy could also suffer from the global slowdown, but the biggest customer of Canada happens to be the United States, so this is one of the things that will keep the loonie somewhat elevated. The relationship should continue, but the oil markets losing luster could be good for about 10 handles before it's all said and done. The pair has several resistance points in the form of 105, 107, and then 110 going above. The levels will all produce reactions, but we shouldn't forget that this pair melted up just a few years ago during the financial crisis. If we do have some type of meltdown in Europe, this pair will skyrocket much quicker than expected. Either way, we will only buy on dips as long as we are above the 99 level.